Good morning, everyone. This is Daily Trade Analysis with the weekly recap in which we are going to cover the economic data of the week along with the technical analysis from top to bottom, from equities to individual stocks, dollar, crude oil, sector funds, everything you need to know from this week to be prepared for next week. And this week, it's been quite interesting. In terms of economic data, we are focused on jobs and also manufacturing. So on Monday, we got ISM manufacturing PMI. I mean, a little bit higher than expected. That caused a little bit of bad sentiment starting off the week that followed up on Tuesday with Jolt's openings coming way hotter. 9.6 million instead of the 8.8 million and more than 700,000 job openings from expected. On Tuesday, we got really bad news that really the market sold off. Technology sector sold off. And on Wednesday, we continue a little bit of that, but we bounced and we put a nice double bottom that I highlighted on the week. Really beautiful technical point that caused a little bit of good sentiment. And if we got a little bit of good data at the end of the week, it might spark a rally. And that's exactly what happened. ADP employment change came way lower than expected. Way lower. Private sector didn't add as much jobs as it was expected. Not even 90,000. We were expecting 60,000 more and almost half of the previous data. And ISM services PMI came as expected, 53.6, 53.6, and less than the previous one. Remember, services sector is the part of the inflation which is sticky, which is the focus of the Fed. That excludes the volatile food and volatile energy and focus in the underlying inflation of the economy. So less employment, private employment, and less services PMI, even though we are above 50, which means expansion, coupled with the fact that services employment was also a little bit lower than the previous one, caused the market to really find buyers. We are going to review that double bottom on Wednesday on the daily chart, finding buyers. Then Thursday, initial jobless claims came a little bit higher than expected, 205 than the previous one, lower than expected, 210, but at least we increased from the previous reading. And finally, Friday. A lot of you might be wondering why did we push, did we rally on Friday when NFP non-farm payrolls came almost as double as expected and 110,000 more than the previous one. This reading is brutal. So let me explain you why. Because we are going to need average hourly earnings to really justify why the markets liked this data. Remember, services is the part of sticky inflation, and we want to stop people from getting money. Not at all from stopping people to getting jobs. Wage pressure, wage spiraling affects inflation. So the less money people have, the less money will go into the economy and affect inflation. So hourly earnings month over month came flat. The previous one less than the consensus 3.3, and year over year we are decreasing a little bit from 4.3 to 4.2, less than the consensus. So people have less money. And I think this is the key that a lot of investors and big money players are liking. They want to see that. So if we go to the Fed Watch tool, we can clearly see that there's no probability higher than 50 that it's for a higher interest rates. We still have December and January around 35 to 40% for a rate hike. But overall, we are still flat for the end of the year and then going lower starting on that's June. So 2 cuts here and 2 cuts here for around, that's number 1 cut and number 2 cut until the end of the year. So I think analysts are not increasing due to this data this week, are not increasing the probabilities for a new hike. They don't think Fed are going to trust to push that. And if we see the sector funds, we can clearly see up here, technology 2.62, communications 2%, consumer discretionary well below, but I think there's a lot of rotation into technology and communications, risk on assets. And below we can find the defensive sectors, XLU, utilities, XLP, staples, and energy. Energy is being pulling back a lot. And that helped the narrative of less inflation moving forward. So let's now go to the charts to really see the beauty of the technical analysis. This is Nasdaq weekly chart. Clear bullish candle, hammer, bottoming tail candle on the week. But most importantly, we need to see where is this happening? Where is this happening? We have a double bottom on the week with the descending trend line into the descending triangle. But this line, the blue dot line, is last week high. We are closing above. So that's a sign of bullish positive sentiment. If we go to the daily, we can see the beautiful double bottom and then a lot of range in these 2 weeks, and then the move higher, closing at the top. Really, really bullish. So what is the next stop? The next stop is clearly that we have this 20 moving average on the daily and the 45. We are in the middle. So for next week, my forecast and what I want to see, it's really market to push higher this moving average, find some support and buyers, and then try to reclaim this descending trend line. But what is true is that this was Fridays and this was Wednesday, the 2 days in which we got good sentiment. The market wants to buy. Participants wants to buy this market, and they did. So on the 30-minute chart, look at this beautiful Friday, because we were flashing B reversal, waiting for NFP with another B reversal, and then let's go to the 1-minute chart on Friday, because I mean, this is why we need to be patient, why you need to be disciplined to wait for the open and to manage your risk. This was NFP news on Friday. We flashed, we put lower low, and then into the open, we started grinding higher. So into the open, we tested, we put a double bottom, and we started slowly but surely going towards this high of day. And once this happened and we held right here, the grinding started until the end of the year, until the end of the day. And basically, this is a volume profile at the top, P shape. That means short covering. A lot of shorts were on this market, and once they were thinking, okay, this week is next to be over, so we need just to unroll our shorts because the fundamental data looks like it's enough for buyers to really step in. And we crashed through the resistance. We crashed through this pivot on Thursday. We crashed through the overnight on Thursday. We started attacking last week. Sorry, on Monday pivot. Look at this. This was clear resistance. And look at where we started seeing some support into the closing at the top, really bullish. So how are the individual stocks doing with this? Well, every single one of them is putting a nice green bullish candle. This was Apple with the support breakdown, trying to fill this gap. It filled a little bit of it, and now we are only with this one. We bounced it, and we pushed this previous trend line, and we are at the 45 EMA on the daily. We pushed through the 20 moving average. We pushed through that. That's quite strong. On Microsoft, big candle, and it's a similar shape than as the Nasdaq, descending triangle, now with a big green candle, and I want some structure before attempting the breakout. That's what I want to see, but Microsoft is also quite bullish. Tesla 0.18, it has its own catalyst. They are lowering the prices again due to low demand, so that's affecting investors. But overall, in the long term, Tesla is building some interesting thing. A, B, C, D with higher lows. I mean, that's quite interesting, right? Trying to prepare for this gap. If you're a Tesla investor, I think you are covered. I would like to see this if I was to be invested. I'm not, but this is quite good on the long term. Long-term perspectives, I think it's fine. It is not a super candle due to this catalyst, negative catalyst, but it's still there. Higher lows, ABCD setup into the ascending trend line towards the previous gap. Really, really bullish. Amazon, consumer discretionary. Again, we are seeing on key structure on the some support with a nice fat big green candle, and look at where our moving average coupled with the gap. So I would like to see more upside, more potential. It has for sure. Google is breaking everything. This was the Nvidia day. We bounced off this pivot. Really, really easy to see before entering the gap, not even touching the gap, and then day by day slowly grinding, and now we squeezed all these sellers, and now we are again as we were in mid-September preparing for the April 2022 gap, and I think if it wants to go straight, it will show really a lot of strength, but at this level I want to see these kind of things to really see some structure, some accumulation, and then the second leg towards 140. Why bullish also? Nvidia, it's a box of surprises, and we are still not clearing this level. We are above both moving averages with a nice green candle closing at the bottom. So how was volume? Volume 43, not spectacular, but I think Nvidia is slowly building something here. And finally, Meta also, I mean, breaking the structure is one of the things that I want to see. It's not a descending triangle yet, but it was compressing. Not as clear as Tesla, but we got this coiling pattern towards the upside with a nice green candle closing at the top. So closing also above this pivot, it's quite interesting and quite bullish, because I think we are going towards 330, 328. So be prepared, because a lot of these stocks, the big seven, are bullish, are quite bullish. You are not late, because you are not too late. This double bottom, I think a lot of people really are positioned pretty well. We are not late. We want still to see confirmation towards this trend line, and these moving averages may need to confirm more potential to the upside. Once we create some structure here, moving average play to the downside right here, and we bounce off them, we can clearly see strong momentum building towards more upside. So you are not late. Don't FOMO in next week. But what is true is that this week Nasdaq tried to hold, it did, and then push and destroyed a lot of shorts. Is dollar converging with this narrative? Yes, it is. Look at this bearish candle. It tried to go higher. That's why I was not super confident, because obviously it's the inverse reaction that we have on the NFP equities response. It pushed higher, but then it retraced. And when we find us here, I think a lot of people started to see dollar weakening and stocks and equities going higher. So beautiful day on Friday, dollar weakening on the daily, really pulling back. But we have to see if we find some buyers here on this previous resistance is now support, and also we have the 20 moving average, so we might see some relief rally. But what is true is that yields are, in my opinion, overextended. In the 2-year yield, we are in the middle of the range, not here. We are in the upper part still, 5+%, 508. And the 10-year, it was ultra extended. This was the channel, and it freaked out. But look at this now. We are putting a nice top. So I expect the 10-year to come into range and see a lot of weakness. But what is true is that dollar and yields are converging with the narrative on equities, and also small caps are seeing nice boost. And Bitcoin is not being pushed along with the narrative that sometimes people have regarding a refugee in terms of money. Bitcoin is not seeing a lot of inflow. It's not seeing volume. Here we had, but here there's nothing. So I think people clearly is rotating towards technology and communication again, now that we have some daily setup, some long-term support, and that we have also fundamentals. So that's good. And financials are also putting a nice day. So what is missing? What is the part that we have bullishness on equities and individual tech stocks, on small caps? We have weakness on the dollar and yields. What is left? Well, we got big weakness on crude oil. After the rejection on 93 October 2022 levels, we got 1, 2, 3, 4, and 5 big. These are big days to the downside. So we were, as of Friday, we are minus 12% down. And look at these days. This is on Wednesday, we got minus 5.61%. So crude oil is clearly seeing a change in fundamental. There's Russia lifting the ban on diesel exports, and also the inventories are going up on gasoline. So I think a lot of people were ultra long, and well, this market is it's quite manipulated. So on the technical side, first round consolidation, the 20 and the flash. So where are we now? We are at this level and the fib retracement right here, the golden pocket. We are not closing there, but I expect buyers to really be here. I will be surprised if next week it's just continuation to the downside towards 78, 77. If this happens, prepare because equities will fly. But this is good. This is showing signs of that the core inflation will not be affected by this, but the headline inflation that has also energy embedded in the reading, it will be affected to the downside due to this crude oil going lower. So energy, it was the missing part that was needed for this market to really push higher as it did on Friday. So we got all the pieces. So next week, I expect a bullish sentiment. Be prepared for some kind of consolidation in some of these markets. But what is true is that I think we can prepare to really see progression to the upside. What we need also in terms of economic data, it's to continue seeing progress towards some good readings. So next week, we got on Monday, on Tuesday, we got a lot of Feds talking. I will try to cover all of this into Wednesday to really provide you with the statements from them. Really interesting. And then look at what we have on Wednesday. Wednesday, we got PPI, core PPI. We are waiting for less readings. So we want PPI to continue going lower and more Feds. And Thursday, we have inflation reading. Oh boy. This is going to be quite interesting. This is on Thursday, but I think Monday, Tuesday, Wednesday, and Thursday are going to be quite bullish continuing because there's no news. We still have to notice that a lot of Feds are talking, but I would like to see some continuation from Friday. Wednesday PPI, on Thursday CPI, and Friday consumer sentiment. So next week is packed with news. With a background of bullish sentiment, everything can happen. But my forecast, my expectation is that I think we can see some kind of explosion to the upside if all these pieces continue being together. So be patient and be disciplined, manage your risk because volatility will be huge, and look for those opportunities because there will be plenty of them. And that's all from my side. As always, if you find this weekly recap useful, please give it a like, subscribe to the channel, support the channel. Thank you for subscribing and for seeing this kind of support. Thank you. I hope you are liking these videos. I put a lot of efforts in them and they are for you to understand my approach. If you like my approach, subscribe to the channel because I upload videos every single day for market forecast, market updates, and market recaps. And on the weekend, the weekly recap in which I cover everything from top to bottom on technical analysis and also fundamentally all the readings for the week. Be prepared for next week. Next week is going to be good. Trust me. I think this sentiment is backed up by a lot of investors and a lot of money inflow. We got that on the technology outperforming every other sector. So I think bullishness is going to be there. So remember discipline and risk management. So enjoy your weekend and see you on Monday.